Hey folks, Dan Frio here, the rate update. Today is February 21st, 2022, President's Day. Well, the markets are closed, but we still have some very important information for you. So check it out. Don't go away. So we post every day kind of what's going on in the economy, what's going on in the markets, what's going on with real estate and mortgage rates, and why. Okay, the biggest question, why? So let's get on to it. What's the news for this week of the economic calendar? Well, let's get to it. Today, you see that it's President's Day, so the markets are closed. On Tuesday, we have consumer confidence. It's expected to come in a little bit lower than where we were last month. That's not hard to believe with all the news that we have out there, and you watch, the news on a daily basis. It's pretty depressing. All right, then we go to Thursday. We have GDP and initial jobless claims. Those are the two things we're going to watch out there, as well as the new home sales for January. They're supposed to be down a little bit from where we were previously, but there's just no inventory, as we keep saying, on a daily basis. And then on Friday, we have core durable goods orders, which isn't going to really affect the markets that I'm seeing. Pending home sales, probably not there either. And then the federal monetary policy report, they basically come out and say, what's going on in the background. So why do we focus in on a lot of times is employment numbers and what the inflation rates are doing? Well, the main reason is, what's the Fed doing? And we all know kind of the Fed's pulling all the strings right now. So how do we tie all this together? Well, the Federal Reserve was created to kind of control, or we'll say mandate, two things: employment and job stability. Oh God, I got that completely wrong. I'll leave this in here. This is usually my blooper reel, okay? For inflation and full employment, okay? Inflation, it's out of control right now. So what do? They increase rates or decrease rates as much as they want consumers to spend. That's kind of how they turn the faucet on and off. If you want more water to come on, you turn the dial and you lower rates. If you want to slow down things, you turn it the other way and you increase rates. Okay, so that's one of the things. And then jobs. Okay, how do they control jobs? Well, having the economy growing and growing and growing on a consistent basis, thus creating new jobs. So that's why they were created, those two things. So those are why we meticulously watch those areas there. So now let's get into the market update. I just posted this and one other social media post on all my social media. Check it out. Would rates be going higher without Ukraine situation? So check it out. There's an article here, and then it gives you a recap of the whole week, what's coming up. And you should find that very informative right there. And then another piece of the puzzle, I just posted it as well. Mortgage rates having a tough time, but the housing metrics are still strong. For those out there saying we're going to have a housing crash, you might want to watch this, or at least subscribe to some of these newsletters that I post. So where did mortgage rates end on Friday? This doesn't mean they're going to open tomorrow this way. And let me explain that. So you ever have a stock that you really want to buy or sell, and you can't in the evening, and then the market opens up and that stock that you wanted to buy opened up like 20 points and you're like, I couldn't get in. Okay, that's basically how mortgage rates go. They end the day, okay, let's say they end the day here, but then the bond market opens up, and then lenders start to figure out, okay, based off of the bond market opening, about a half hour later, all the banks publish their rates. So those rates from when they ended the day before could be higher, could be lower. That's why a lot of times, if you ever spoke with me, I hate weekends, because it's a long duration of time for something to go wrong or something to go very well. So we could have dramatic changes there. So I just wanted to let you guys know this is where rates ended Friday, but not necessarily where they're going to open tomorrow. All right, but here's where they ended the day. So on the 30-year fixed, we go right through here. Let's zoom in on this category right here. So those, for the newbies out there, I'm going to teach you how to do this. For the old people out there, that I won't say old, the people that aren't newbies, scroll ahead until you get to the other sections. So you go through here, right here. The 30-year fixed, that means the 30-year fixed rate on conventional loans. What's a conventional loan? Well, it's not an FHA loan, a VA loan, a USDA loan, a non-QM loan, a jumbo loan, or an ARM. Or it could be an ARM. All right. So it's basically the standard mortgage you think of if you're going to get a mortgage. That's why, and I'm going to explain to you here in a minute, why you need to know that you're in the right program. Do you fit in the 30-year conventional fixed or possibly an FHA, maybe VA, okay? Maybe USDA. There's a whole bunch of options for you. So, but where we are right here, Zoom, we're at 4.08 where we ended. We are down 0.01. We reference that as 1 basis points. The biggest thing I want you to watch here is, you see this under here? Really hard to see. Let me highlight it, okay? Let me see if I can highlight it. And I just botched that whole system. Let me go here, okay? So you can see it. It's really hard to see, but it's at 0.4 points. It would cost you 0.4 in points to get that rate, okay? How do you figure that out? So basically take your loan amount, multiply it by 0.4, and then hit the percent sign. Okay, that's how much it would cost you to get that rate. All right, so then we go down through here. This is the 52-week high and low, and we're just off the highs for the 52-week, for the 1-year rates. Let's zoom out and go across the board. We have the 15-year fixed coming in at 3.33, down 1 basis points. Halt for a second. I'm going to explain something to you. These are not my rates. These are the national averages posted by or published by and surveyed by Mortgage News Daily. So to find out my customized rate for you guys, I need you to either call, schedule a meeting, or apply, and we can get working on that for you. And I'm going to show you how to do that at the end of the video. So let's get back to the rates. So then you go to that rate. It is also coming in with 0.4 in points, okay? 52-week high and low, we're teetering right off the high. Then we go to the 30-year FHA / I'll say VA, because these are the government section. 3.68, down 2 basis points with no points. 30-year jumbos up 2 basis points to 3.59, no points. And we have the 5/1 ARM at 3.72, up 3 basis points, and coming in with a 0.5 point or 0.5% cost to you to get that. All right, so that's where we are for the day. We added some special features to our website. I'm going to go through those briefly with you. If you want to find the value of your home, go to therateupdate.com and go right here. Plug in your home value. Okay, what's going to happen? Let me tell you what's not going to happen. We don't sell your data. You're not going to get called from 50 places. Trust me on that one. But when I was always, people call and say, what's my house worth? Or I ask them what their house was worth. They take a wild guess. They kind of know, but might not know or whatever. How do you really find out? I would highly suggest you use this system. Again, if you like it, kudos. If you don't like it, ignore it, unsubscribe, whatever, it doesn't matter. But you plug in your address. It's gonna find your address. You start plugging it in, it'll find it, you click it, it'll come up and say, hey, your value is, 500,000. And then it's gonna ask you, do you wanna subscribe and unlock all the features? There is a fee for this. I pay it, you don't pay it. It's free. So if you end up not liking it or not using it, it didn't cost you anything. But plug the data in there. Okay, what it's going to do, it's going to pull up all kind of information about your house. It's going to say, here's the house value and why. You can tweak it. Okay, if you wanted to rent it, how much could you get for it? It'll analyze that. Do you have any mortgages on there? Maybe you don't know. Well, it's going to tell you all the liens and all the activity on your home. It's going to tell you what the taxes are. It's going to give you the opportunity, hey, based on the information we have, there's an opportunity for you possibly to refinance. Doesn't tell you have to. It's just going to give you all these options, the value, all the liens on your property. You might have a lien on there you don't know about, okay? That's kind of scary. If you wanted to rent it, could you rent it Airbnb? It's going to tell you how much you can get through Airbnb. Fantastic feature, okay? And then one other thing out there for the realtors and mortgage advisors out there. We're asking for realtors to participate in this program with us, okay? How and why? Well, if you the homeowner, you go in there and you're like, okay, maybe I want to sell my house. Maybe I want a real true value of my house. How do I get that? Well, you get it through what's called a BPO, a broker price opinion. If you want to connect with a realtor, we'll have realtors in your area that we can reach out to and say, hey, Mr. and Mrs. So-and-so want to find out how much their house is truly worth. We'll link the two of you together. On our side, we're going to have realtors built into the system that we've already vetted, that we have a true, link with, because they're representing me. I'll say it the best way. So I want to make sure that the people we're referring to you best fit our needs and our values, okay, is the best thing there. One more piece, I'm going to do a video here shortly right after this will be posted by the end of the day. If you're a mortgage advisor out there looking to make a change, I just recently made a change. I'm going to explain why in this video. But if you're in there and you want to maybe join the Frio team or just join Nexa, who's the largest mortgage brokerage in the country, and why, just go over here. On the website, we've had two new inquiry forms. Okay, I'm going to duck a little bit. Let me go down. Let me just get off the video. You're going to go down through here. It says inquiry forms. If you're a realtor, you're going to click it. It's probably going to ask you to log in with your Google account or some kind of Gmail account. Why? It's to make sure it's secure. And you're going to fill out your information. It's not a huge questionnaire, but again, why are we doing this? We're going to vet you. You're going to get a call from me or one of my sales managers to kind of ask you some questions. Same thing if you're a mortgage advisor out there. You're looking to make a change and why, or at least kick the tires. Go into inquiry forms, mortgage advisor, hit it, fill it out, and then I'll probably be the one calling you because you really need to reflect our values and what we're looking to do. So that's it for today, guys. I hope you find value in my channel. If you do, please don't forget to subscribe. Give me a thumbs up, subscribe down below, hit the bell every time I post a video, you get an alert, okay? So how do you reach out to us? It's easy, right here. Call 844-775-5626 or schedule a meeting. It'll open up a calendar, give you the days and times we have available, or just click the apply now button. It's gonna take you about 10 minutes. Based on the answers you give to the questions, it's going to tell you need to upload these documentations. So when we get back with you, we know exactly what we're talking about. So thanks for watching, guys. If you're a realtor or a mortgage advisor, please check out my video later this afternoon. We're reaching out to you guys to help grow your business as well as ours. Take care. God bless, guys. I'll see you soon.